Plan as if you'll live forever, and live as if you'll die today. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today's episode, we're going to discuss infinite banking as it relates to estate planning. Now, I'm no CPA, attorney. I'm a professional in my own space, so consult all the appropriate professionals. This shouldn't be construed as advice, but let's have a conversation about estate planning, because if we go right to one of Nash's key principles in becoming your own banker, it's thinking long range. And in fact, he actually says thinking and planning and acting intergenerationally. So if we're thinking several generations into the future, estate planning is going to come into that conversation. Now, I know that there are lots of reasons why we don't think ahead and have established plans that can be well carried out after our time, after our, what Nelson would call our graduation. There's this life, there's another one, I believe. If you want to talk about that, we can have that conversation too. But planning how we'd like our estate, well, let's go. Webster actually says that estate planning is the arranging for the disposition and management of one's estate at death through the use of wills, trusts, insurance policies, etc. So let's break that down a little bit. The arranging. So what I'm talking about is the arranging to get things started here. See, folks that are either looking into this concept of becoming your own banker, vetting it, researching it, studying it, folks that are early in their process or far along in their process of becoming their own banker. We're wanting to arrange things where we have control, where we are setting things up. In fact, I would actually point out now, and I might even have it in my notes to get to this later, but having a properly structured policy, which is the tool, the vehicle, the entity that we describe on this channel that's the best appreciating asset for using to account for your need of finance, the banking function, becoming your own banker. A properly structured whole life policy with a mutual company that pays a dividend is like a pre-engineered tax-free trust. So for those that are, again, whether you are still vetting this idea of becoming your own banker, whether you're already, a new client or even a more mature client, again, if you're tuning into this information, estate planning, these types of legacy ideas, planning, acting intergenerationally, it's all very relevant for us on this side of the hereafter. So being able to arrange things where we maintain control, of course, the definition goes on for the disposition. Now, concerning the disposition, it's a beautiful thing to realize that we can transfer capital in a completely tax-free way from generation to generation through the use of privatizing our banking by buying whole life policies with mutual companies that pay a dividend and having our beneficiaries, our heirs, whoever it is that we elect to have that benefit, receive that in that tax-free fashion. Now, Nash would actually say that really, when the very first generation, that for my family tree, it's going to be my wife and I. We are the first generation that has implemented this approach of buying these types of policies, using them through our lifetime, with the ultimate end goal of accruing a massive, as big as we can, death benefit for our heirs, our children, future generations, nonprofit entities that we care about. So all the things that would have to do with the disposition and management, and that's its own conversation as well. I was having a conversation earlier with a prospective client, and we were talking about the scripture that talks about training up a child in the way that they should go. And I was telling them about a really, really proud moment. I'm actually really glad I thought about this just now. I was telling them about a really proud moment that I had just this week. We're getting close to a birthday of our oldest son, and he'd already gotten some gift money, and someone in the family made a joke about, who's not practicing this concept yet, who made a joke about, well, let me borrow some. And my son said, no way, it's going into a policy. He said, it's going into my policy, which is accurate. And I just love that, we're living out what Nash would say when he would say that more is going to be caught than taught. And we're certainly trying to teach our children about this family privatized banking. And that's why I made that reference to that scripture that says, train a child in the way that they should go, and they will not depart from it. But more's caught too. We try to let our children in on as much as we can, age appropriate, put things on their level, so that these terms, these real life implications of arranging for the disposition and management. See, my wife and I own policies now on our children, just like I was saying, because they're minors. They cannot own those themselves. So we get to bank with those entities in the here and now for the things that we're going to do as a family. And of course, we can grow and scale what those policies are and will be capable of in the future, when it may come to a time where we will consider transferring those private assets to our children for their use. So we have all the benefits of using these policies now. That's in our system of policies, because we've built a system of policies over the past several years of being our own banker. And we get to arrange the disposition even while we're alive, which is beautiful. These are private assets. You can transfer those assets. When our children reach an age where they're going to be buying their own cars, running their own businesses, pursuing their own careers, growing their own families. I mean, we can decide when is appropriate to be able to just go ahead and transfer those assets to them. So on that particular point of management, our children have the benefit of seeing how we pay premiums into policies, use our policies for the things that we do as a family in our business, etc. Any investing that we choose to do along the way, which we've also allowed them to participate in those things that we do outside of just running a home and running a business, which has been a lot of fun getting them involved. So I guess I'm focusing in on the verbs of that definition: the arranging, the disposition, and the management of one's estate. And then, of course, it must specifically, I mean, my goodness, insurance is older than America. So, of course, when it comes to this idea of estate planning, I started to get hung up there, if I'm being a little slow, because I'm thinking, I said it's older than America, which when you really start thinking about how insurance is older than the automobile, and we're all driving cars and using cars, and yet we still have misconceptions about whole life insurance. It's astounding. It's astounding. Life insurance is older than manned flight. I've been on an airplane. My children have been on an airplane. We've been able to take international vacations with them much earlier in life than I did. And folks know less about life insurance that's older than the automobile, older than manned flight. Just incredible. It's incredible. So, of course, in the definition of estate planning, insurance policies are mentioned specifically, and other things are as well. And those are appropriate things to consider: wills, trusts, etc. And that's why I say what I do about consulting all the appropriate professionals for you in your situation. I don't particularly have a cookie cutter approach. In fact, I don't have a cookie cutter approach for individual clients or prospective clients in our process. I want to look at someone's particular and exact financial footprint while we're going through, them vetting me vetting them, seeing if we can work together our process. But that's the definition of estate planning. You probably already had your preconceived ideas educated ideas about estate planning. I do as well. But again, for those that are concerned with becoming your own banker, for those that are concerned in fact, having insurance policies be a part of our plans to dispose of assets and have assets managed and then transferred and all these types of things, it's important, it's relevant. Now, I'd like to point out a few characteristics that make a policy described the way that I have such an ideal asset for use during your lifetime. Again, I'm not trying to focus on the death benefit. I'm not going to ignore the death benefit either. But there are many, many what we call living benefits to a properly structured policy with a mutual company that pays dividends. And the first being that it's easy to manage. It's easy to manage. So I can read, I can do third grade math, I can make a phone call to access capital in private assets that I own. And when I do, all I'm asked is how much of what's available do you want sent? Where do you want it sent to? It's done. That comes to me. I know what to do with capital. That capital arrives. I deploy it or employ it however I choose. I'm the banker. I get to repay that back on my terms and conditions, my timing, my schedule. And the whole while I've continued to compound my money into the future for the rest of my life. I have maintained access and control without interrupting that compounding. And I just did it by a phone call. It's amazing. It's absolutely amazing. So it's easy to manage. There is a process to get approved for life insurance. Of course, there's underwriting that takes place, meaning medical examinations, answering financial questions, etc. But we have that process in place. We go through that process, and once that policy is in force, my goal, of course, is that you get to be as independent, and I'm gonna encourage you in that direction. You get to be as independent. It's becoming your own banker. You get to be as independent and autonomous as you want to be. Also, you get to have as much access as you would reasonably expect from a financial professional. We can have, we'll not as close of a relationship professionally as you would like to have, so that I can help speed up your learning curve, assist you in your particular situation, all while knowing and recognizing and believing and living what Nash said: when you know what's going on, you'll know what to do. So I'm just here to encourage you in that particular direction. And it's easy to do. It's easy to manage. It is simple. Of course, I've already mentioned some of the tax-free benefits while owning properly structured policy. It's structured for the banking purpose, which means it's going to have a high cash value, and you get to access cash value via policy loans from the company, and you get to do so in a tax-free manner. So one of the great living benefits, while preparing as big of an estate as we can, because if you take account of the banking function in your life, and you implement becoming your own banker over your lifetime, it's the most profitable thing that you could choose to do. I had a great conversation this past week with a serial entrepreneur. Great conversation up in New York. And we were talking about different businesses and some of the ups and some of the downs and some of the lessons learned that help level things out as far as consistent income, great income, but a great conversation with a serial entrepreneur. And we were talking about how the next most practical, logical step would simply be to finance what's already being done. There's no stopping that gentleman from being an entrepreneur. That's all he's ever going to be. He's got big goals, big plans, big dreams, doing great business, and has aspirations for passive income at a certain point in life, and that's great. I love it. But at heart, that man's always going to be an entrepreneur. There's no stopping him. So what does it make sense to do when thinking about estate planning there? Because He has 3 children, for example. So what I'm saying is everything that we do in the here and now, of course, if we can become more profitable there by becoming our own banker, fantastic, great. But again, for those that are thinking long range ahead with me, that want to see children inherit or at least be able to procure for themselves, aided by our efforts, property of their own, a home is. This gentleman had also just told me how he'd moved from, the city to a suburb. It was calmer. It was more pleasant. It was more laid back. It was just nicer. And we got to talk about how we'd like to be able to do those types of things for our children and speed up that curve and give them a leg up and maybe not have them start from scratch like we did. So everything that we can do in life using and accessing these living benefits of a privatized banking system is just going to contribute to that future transfer of wealth, and that will also be in a tax-free fashion. 100% of a death benefit to a beneficiary is tax-free. It's amazing. I've already mentioned how a properly structured policy is like a pre-engineered tax-free trust. I mean, it's a private asset. It compounds for your whole life. You can use dividends, of course, to just buy additional paid-up insurance. Contractually, you have that right. You can just decide that's what you want it to do, and then that death benefit continues to go up into the future. Of course, I mean, that's just how a policy works. What we do with a policy, that's infinite banking. What we do with our capital, using the policy as the entity of our privatized bank, that's where the magic really happens. And again, I guess that's what made me think some of that conversation with that entrepreneur, because we're doing this in business and we're getting ready to scale here and we're making strategic partnerships here. And it was just good conversation. And it's so practical to consider financing what it is that we're already doing, knowing good and well that that's going to contribute to the longevity of our family banking system, generation upon generation. And really, it was Robert Kiyosaki that said that taxes may be the largest eroder to wealth. So when you really do wrap your mind around, okay, estate planning, tax-free transfer of wealth via death benefit from whole life policies from generation to generation, if taxes are the largest eroder to wealth, and from the very first generation providing a death benefit tax-free to the next, another scripture, I guess, that I was having a conversation with another friend about this past week was somewhere in Proverbs. It says something about a crown is not promised. It's not guaranteed, essentially, from one generation to the next. I understand that. But again, train up a child in the way they should go. If you know better, you can do better. You still got to choose how you're going to do things. We all got to confront Parkinson's law. We all got to confront these human issues at hand. Nash covers that in his book as well. If you don't know what I'm talking about, read Becoming Your Own Banker by R. Nelson Nash. I highly encourage you. But sure, doesn't that put a pause? Doesn't that put a stop in this whole scenario of one generation just struggles to get something, maybe ends up liquidating it all in their financial trajectory, and end up with nothing, maybe less than nothing, maybe owing things. So just financially speaking, couldn't that put a stop to that cycle and allow a generation not to have to start from scratch, but actually be able to start from a much greater base? And I don't just mean money. I don't just mean handing off money to the next generation, but handing off money, handing off capital with knowledge, with an understanding of what it means to become your banker, not be enslaved to the conventional banking system, not be beholden to someone else's terms and conditions, and to be suffering from inflation that is out of our hands, but by having guaranteed appreciating assets, generation upon generation upon generation, wherein we can access capital for the things that we're going to do. Now, that gentleman that I mentioned earlier, not everybody's going to be a serial entrepreneur. Plenty of folks are just pursuing a career, looking to do as best as they can, getting certifications here, licenses there, moving up the ladder. Fantastic. Some folks, they're going to be sole proprietors. Some folks are going to run 500 plus employee big businesses. Some are going to be full-time investors. Some are going to be part-time investors, or a mixed bag of any of those things. But either way, banking's taking place. And again, if I'm trying to go back to talking about taxes, if we could handle what may be the largest eroder to generational wealth, taxes, then that's a huge stumbling block that we're getting out of the way for those future generations. And it's a relevant point to make, just because even when someone shares their net worth, for example, it's worth asking, well, okay, that's what paper says. I get that. But what would actually land in the hands of those that you're trying to bequeath these assets to? I mean, after probate court or litigation or taxes, I mean, just there are things out there. Again, consult your other professionals as necessary. But there are other things that happen. How much is actually, I mean, okay, this property is worth X, Y, or Z, again, on paper, but at any given time, I mean, what's that going to look like if that has to be split between other folks? And do you want to split that static asset? If it's family land, family home, has some kind of meaning, you might not want to, but how do you? So again, that's where we see that having liquid funds from a death benefit, from a whole life policy, makes things much easier as far as having liquid cash on hand for, like we read, taking care of the disposition and management of one's estate. Fees, oh my goodness, fees on things. When you start looking at what, even if it's numerically, I mean, we're told, okay, well, I only have a 1% fee, or I got 2% fee, 3% fee. That sounds like such a small number, and it's so easy to bypass that. But if you start calculating, what does it look like to pay 1% compounding fees on any given asset? It's a more of a significant number than I realized when I actually did the math. So I'm just saying, it's worth looking at. And let me return and elaborate more on that one point of, when it comes to making your arrangements for the disposition and management of assets, there's some, and I'm not telling you what to have. You have what you have. You're going to get what you're going to get. Okay. But what I'm saying is I would not overlook the benefit that I mentioned briefly earlier in saying that the liquid capital that you receive from a death benefit from a policy or system of policies really, really does help when it comes to rubber meeting the road. Maybe there are stocks here. Maybe there are qualified plans here. Maybe there was property here. Maybe there was business equipment there. I mean, every situation is different, but these other illiquid assets that are out there that may be transferring from one generation to the next, having that to offset that illiquidity, having that liquid capital from a policy or policies to help when it comes to dividing things up, funding whatever it is that you have as your wishes set in place, it just smooths things out so very much. It just helps so very much to not have to consider auctions or selling this or who gets that based off of just trying to make numbers work, trying to make math work, trying to make money work. No one ever said, I've got too much money. Nobody I know. Now again, let us have a mental exercise here. Let's paint a mental picture for ourselves where I've spoken a good bit already about how a policy is and the death benefit. And I've spoken some about the living benefits, but let's just say that as a family, when I say family, what if 1, 2, 3 generations that are living worked together to build a system of policies to create a privatized family banking system wherein the cars, the homes, I mean, we could get as elaborate as we want, but I mean, what if it were just, let me just tap the brakes, I guess, and say, what if it were just the cars? Most homes have a car and more than one car. And then isn't that the same for the next home and the next home? So what I'm saying is if there are grandparents with vehicles in the driveway and they have children with vehicles in their driveways and they get married and they have children, those children grow up and then they want their own cars and they're going to get their own cars. And there are only a couple of ways to go about that. You conventionally finance, you're beholden to somebody else on their terms and conditions. If they approve you, you pay them interest, you're beholden to them. Or you have to set aside capital somewhere. You're forfeiting the opportunity to earn on that income. You liquidate it down to nothing. It's gone forever. It's out of the family pool. It's out of the family reach. It's forever out of your financial footprint as a family. But again, if you're implementing the infinite banking concept and you've built up this system of policies and the grandparents, parents, grandchildren, spouses of these different generations finance the family vehicles from the family bank, and that principal returns back to the family bank, interest that otherwise over those generations that otherwise would have left to someone else gets back in the family bank, fair market value interest, okay, maybe more, because whose banking system is this? And here's a great point for anybody that's hesitant, because family can get goofy about money. It's an interesting subject. Some of y'all are laughing with me now just by me saying that out loud. It provokes thoughts. Think about this. In general, money has a cost to it. Capital has a cost to it. Interest is paid and should be paid in a family banking system like a conventional one or any other. With that being said, when I said just a moment ago about whose banking system is this, now think about this. Think about this. Any extra interest that a grandparent pays for their car, let's say they could have gotten, the car loan at 5-7%, whatever. I don't know. It doesn't matter. And they just, okay, easy numbers. I'm going to say 10%. I'm going to pay 10%. Where does that extra capital go? Into the family banking system. Who's going to end up with that? Children, grandchildren, so on. Weren't they going to end up with whatever was left behind anyway? Yes. But now instead of that interest going to third parties, it's staying in the family bank. So all you're doing is becoming more and more capitalized as a family. And again, over time, that process of family banking just gets more and more efficient. And again, once you are financing everybody's cars, you've got to move to something else. That capital is just going to amass to a point to where it's just going to become obvious. It's like, well, okay, it's certainly time to be doing family financing of college, family financing of wedding gifts, weddings themselves, mortgages. What if your children, what if your grandchildren, what if your great-great-grandchildren never had to have a mortgage with a conventional bank? What if that was financed within your family? Now talk about estate planning. That's incredible to think about. So interest, profits, if the family does any kind of business, investing, again, it's becoming your own baker. I'm not telling you what to do, but if that's what you do, where do those profits return? Where would you warehouse that wealth? Your privatized family banking system. So this concept of all the living benefits, and it's called the infinite banking concept for a reason. Cars, homes, fill in the blank. There are infinite things that we could be doing there as a family. The limit is our imagination, for sure. You're going to be keeping more family funds in the family for that estate now and later. I mean, again, if your family started getting back all the money from the vacations that you take, couldn't you take bigger vacations, better vacations, longer vacations in the future? Isn't that what that means? If you account for your need of finance, it starts with somebody. For our family, it started with us, my wife and I. We had a brother catch on with us as well, and we locked arms, we're making an impact. It's not yet realized, all of it. And we've got a lot, God willing, we've got a lot yet to implement ourselves just while we're alive and grow and expand that. But we think about these types of things as well. We have these types of conversations as well. And again, if you're a client, and this in particular interests you, of course, we have regular scheduled calls, strategy calls throughout the year with clients. But if for whatever reason this impacts you in a big way, just don't hesitate to reach out. And if you're vetting this idea, if this is a subject that interests you, that concerns you, that you're animated about like I am, planning, your estate and being able to do so as your own banker, let's have that conversation as well. But what I was going to point out there is that if you'll account for your need of finance, Nash says that you'll ultimately end up with more death benefit than you could have originally have been underwritten for. Meaning, anybody, you, I, we can all only qualify for a certain amount of life insurance, and that's why it's important to talk to a knowledgeable professional who's actually implementing this idea. Not going to a box office store and saying, I want life insurance. But properly structured whole life policies with mutual companies that pay a dividend from a competent professional. Someone who's actually implementing this idea of becoming your own banker. Because anybody is only ever able to have a certain amount of death benefit. That's why policy structure matters. So if that's so, and you get approved for a certain amount of death benefit at any given time, and then over the course of your life, that grows, it can grow to an amount that you originally would not have been able to be underwritten for. And that's due to just what a policy does, how you use dividends to buy paid up additional insurance, but also how you use the capital within a policy that may allow you to pay additional premiums in the future as well to grow and scale your system. That's an amazing concept that in the future, as we age, and who knows about health in general, I'm as healthy today as I'll ever be. You're as healthy today as you'll ever be. It's something I'm constantly working on. I hope you are too. But to be able to know that in the future, you can grow what it is that you're doing because you have a contractual right to use dividends to buy paid up additional insurance that will grow the death benefit, and it can grow it to an amount that you didn't even originally. So that timing, I guess what I should say here is like, again, when you know enough to know that you want to become your own banker, get started. I'm all about education. That's why I put my best practices out there. That's why I'm on the phone all the time. That's why I'm recording all the time, so that folks can learn as much as they want. But when you know that you want to get started, be about it. The future's unknown. I don't know what it holds. You don't know what it holds. But once you have such a policy, that is your private asset, and it's part of your estate. And then, of course, you get to dispose of that as you wish. So I can't say enough about the implementation of education along with these amazing financial tools and this knowledge. The education from generation to generation is what is going to give that crown the best bet of going to the next generation. That training a child up in the way that they should go. Because more's caught than taught. All my parents out there know what I'm talking about when I say something along the lines of, sure, I mean, they hear you maybe when you say something, but they really, really see you. I mean, when I see my children do something that I know that they've seen me do and it dawns on me for the first time, it's like, I know right where you got that from. Because I see myself in that action that I just witnessed. And it could be a great thing or it can be a chastising thing to recognize, well, that's an area I need to work on because they're catching on to what it is that I'm doing. But in living financially free, independent, autonomous, I can't encourage you enough to get as educated as you want to be and to get started as soon as you can. Because the best time to have planted a tree was 20 years ago. The next best time is today. Remember what I opened by saying, plan as if you'll live forever, but live as if you'll die today. So why not leave a massive transfer of capital tax-free to the next generations? Why not share this information about how they can be their own bankers. Never even have to walk into a conventional bank to ask to borrow money for something they want to do. I mean, is there any kind of moral high ground in making the next generation start from scratch? And don't get me wrong, I value hard work. I value lessons learned. But again, if you could do better, why wouldn't you? And that reminds me of another scripture that says, a good man leaves an inheritance to his children's children. So if that means a lot to you like it does to me, and we haven't yet spoken, don't hesitate to reach out. You can contact us at 828-817-4223. You can email durhamtalents@gmail.com so we could talk about how you could implement this infinite banking concept into your household, your business, or your investing. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. I'm centered, lights are on, space is clear. I'm handsome as can be. Notes, audio. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I'm fired up. Oh my goodness. Yeah, all right. Yeah. Walkabout. Give it to him, Mick. He's got a knife. Yeah, that's not a knife. This is a knife. Crocodile Dundee. That's right. Yeah, walkabout. Yeah. Trying to think about how his voice is. Something like this, yeah. Alright. Yeah. Hey, Charlie. Yeah. Walkabout. I don't know. I gotta watch something to remember. Okay, we're done. Have a great day.